The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. We're live from Paris and London. These are your headlines today.
France faces a parliamentary impasse as the winning left-wing bloc insists it will run the next government, but admits it will be tough, while President Macron rejects Prime Minister Attal's resignation.
The S&P 500 and Nasdaq close at record highs, while the Nikkei surges more than 2%, as investors look ahead to Fed Chair Jerome Powell's testimony before Congress. Joe Biden insists he will not be withdrawing from the presidential race, even as donors become increasingly concerned about the state of his health and markets price in a second Trump presidency.
And crude dips on fears Hurricane Beryl could hit U.S. demand as the Category 1 storm slams into Texas, grounding flights and leaving millions without power.
A lot of developments still out of France, where the left-wing New Popular Front and Macron's centrist group of parties seem to have successfully kept the far right from power. But the dust is yet to settle, with the race for control of the country's National Assembly only just beginning. In the first sign of the political gridlock set to dominate the French agenda, President Macron rejected Prime Minister Gabriel Attal's resignation Monday, asking him to stay on for now to ensure the country's stability. The NFP says it aims to put a candidate up to replace him in the next few days, but that person would need the support of Macron's group, and there are a few areas where they agree. On top of that, Parliament is in deadlock, with all three main parties far short of the 289 seats needed for an absolute majority. One option is a left-wing minority government, but that would be at the mercy of a no-confidence vote from its rivals. In the meantime, Finance Minister Bruno Le Maire has warned of the risk of a financial crisis and economic decline. And let's take a look at how the euro has been tracking. The early trade, 108.29. There was a view yesterday that euro is not exactly the area to trade on the back of the French election. But I think what you've seen, more gyrations elsewhere. In particular, let's take a look at the 10-year OAT yield. This has been fluctuating since before the election. What we've had now since the election was called 3.17 on the trade at this point. Let's get out to Charlotte for more. Charlotte, we even saw some of the uncertainty play out on the stock market as well yesterday, individual trades. Just walk us through the harsh reality today as the left tries to form a government and the sort of concessions that are going to be required.
Well, it is a bit of the feeling of the day after the party. Of course, the left-wing bloc very happy to come top in this parliamentary election. This kind of surprise result that we saw and pushing the far right into third position. But of course, now the reality is crashing on them, and it's going to be difficult for them to present a new prime minister. You know, President Macron should pick their group to pick a new prime minister, but they can't agree amongst themselves on who should be prime minister. We know that there are a lot of differences between the different parts of that group that was put together very quickly, just 4 weeks ago when the snap election was called. And of course the main aim of that group was to block the far right, but now they actually have to present a name of a prime minister, and there's a lot of disagreement there. We know that the figure of Jean-Luc Mélenchon, the head of Les Insoumis, is too much of a polarizing figure. So they are meeting in the next few days to come up with a plan and be able to put forward a name to President Macron. But even if they manage to put a name forward, it has to be quite a consensual figure and bring on some other members from other parties to side along with them, because they are very far, as you were saying, from an absolute majority. The final number is 180 seats. The absolute majority is 289. So they have to get other parties on board to join them just on specific projects, at least going forward. So that's the challenge at the moment. And we hear from parts of that group that they absolutely don't want to negotiate, while others, like the socialists, are very open to negotiation. So that's what's going on this week at the moment. And President Macron, as you were saying, refusing the resignation for the Prime Minister Gabriel Attal, Attal to kind of run the everyday affairs until there is potentially a new team being put in place. Of course, in just 2.5 weeks, you have the Olympics here and all these challenges that it has, particularly around security. So the current team will stay in place while we see if and when a new government can be put in place. So in the meantime, President Macron is flying to Washington to the NATO summit where he's leaving the parties here, kind of do all this negotiating in the meantime. But what we heard from the economy point of view as well is from S&P yesterday, talking about how they anticipate that the resulting government will struggle to implement meaningful policy measures and to address some of the key issues, including public finances. Say there's a persistent risk of a vote of no confidence facing this new government. So that's all the challenges that we're facing at the moment. The gridlock, this kind of new configuration of the National Assembly with 3 blocks that are completely different and all very far away from the absolute majority. They're going to have to make politics in a different way. They maybe do coalitions, which is not in the French political tradition at all, because at the moment, everybody is very far from a majority, and it's going to be very, very tough.
Thank you very much for that, Charlotte. I'm going to push on and take a look at a French company. In fact, this is one company that is seen right at the forefront of the technology race with its digital twin. Dassault Systems out with some disappointing news today. And don't forget, we've already had a couple of revenue disappointments earlier this year from the company, and now reporting a revenue shortfall estimated at 30 million euros, mainly due to large transactions being delayed. They're updating their 2024 objectives for the year to integrate volatility factors, with total revenue growth now expected to be in the range of 6 to 8%. So this is now underwhelming on the outlook versus estimates. In terms of the print for the second quarter revenue, 1.495 billion versus 1.55 billion expected. So that is under the estimates that were set in the marketplace. But it's timing issues, apparently, according to the business, that anticipates volatility in customer decision-making will continue. So these large transaction delays that are citing, this is a cut now to its 2024 view on the outlook on that revenue print. So big company, what's slowing down exactly? And it does raise some questions when you think about the adoption of AI, the adoption of technology. Is this a macro issue? Is it a credit cost issue? Is it something around France? I think it opens up a lot of questions as we see this very large French company report that there are issues with their revenue timing to date. Arabile.
Yeah, Karen, I mean, we can continue with that market look, right, particularly in Europe then. I mean, Dassault Systems, of course, in the CAC 40 then. And really, this has been very interesting because yesterday's market movement across the board moved from one side to the other. We saw distinct vacillations, particularly in the early part of trading then. Even the gains that we initially saw during our broadcast then immediately fell away for the most part throughout the rest of the day. In fact, so much so that we saw the CAC 40 then close down 0.2% then by the end of the trading day yesterday. Let's remember that overall, the market is still down around 5%, actually, the CAC 40. That is, since the election was called. That was back in June 9th. Of course, the French banks have been the hardest hit in the run-up to the election. There's been an attempt to look at it, some sort of recovery, of course, is what we thought we'd see yesterday, somewhat of a recovery trade, perhaps some relief trade as well from the markets. Well, that wasn't necessarily to be then. As you can see, the CAC 40 then dipping down more than the rest of the other markets then. And, well, investors reacting to that surprise win then for the left of the country's parliamentary election basis, then reversing those earlier gains. Overall, the stock 600, though, was pretty much flat in yesterday's trade. Over stateside then, this has been very interesting. Of course, we're leading up to that inflation data that comes out on Thursday. Plus, we have the start of the earnings season. The likes of PepsiCo as well said to put out their numbers. So too Delta Airlines to post their results on Thursday, along with that CPI print. Then, of course, the big banks come in then on Friday, which will be quite significant. But before that, we will be hearing from Jay Powell, and of course that testimony as well, very interesting to make note of. But another trading session and another set of records, both the S&P 500 and the Nasdaq then managing to move higher in yesterday's trade. Yes, benign moves, but still further into record territory then for both of those. The tech-heavy Nasdaq, of course, seeing the tech stocks being the best performer, as 6 of the 11 sectors were in negative in yesterday's session. Onto the bond market then, particularly the treasuries here. Little change then. Investors still looking ahead to that key economic data as we focus on the 10-year note at 4.286. 4.63 then is where the 2-year note is. Of course, this will be interesting to get a clear sense of perhaps the rate path, what the anticipation is then from the market by the end of this week then, with the CPI print being very important to that. Over onto the Asian market then. Well, Asian markets have been, stocks have been led a little bit higher than by the Nikkei, which is 2.3% to the good then so far this morning. A fresh record high then as well today, as it gained nearly 1,000 points, just shy of 42,000 points, as we can see right now. Samsung Electronics is also up today, and this is actually despite them having still that labor dispute, a third day of strikes then for better pay by the largest union then at Samsung Electronics, impacting things there. While on the other side, Hyundai, on the other hand, reaching what is a tentative wage agreement then with its labor union, meaning that it has averted a strike. But despite that, that stock is down 3.5%. Chinese EV giant BYD also is said to invest $1 billion in Turkey. We'll unpack that story for you as well throughout the show. And TSMC hitting an intraday record high then back in Taipei, with its shares rising as much as 4.5%. That stock up 75% year to date. So an interesting one there to look at this market picture. Karen, what's coming up this week?
Well, Arabile, there's plenty on the agenda. We've been talking about politics at the start of this week, but as we look ahead to key economic events and the start of the second quarter earnings season this week. Later today, we'll be hearing from the Fed Chair Jerome Powell for the first day of his congressional testimony. Wednesday brings a check on the Chinese economy with inflation data before Thursday's all-important US CPI print and the latest reading on UK growth. Then the real fun gets started on Friday with the beginning of the quarter's earnings season, with JP Morgan, Citi and Wells Fargo all reporting. US year-ahead consumer inflation expectations fell for the second straight month in June, now expected to rise 3% over the next 12 months, down from 3.2% in May. But the median expectation for inflation in 3 years ticked up 10 basis points on the month, now at 2.9%. And of course, expectations on inflation obviously key for a lot of economists.
Certainly are. Bryn Jones, of course, is head of fixed income at Rathbones and joins us now as we get into this a little bit more. Bryn, thank you so much for the time this morning. Appreciate it. Then one thing is for sure, that the outlook on these interest rate cuts possibly is one that the market is focusing on. And of course, very key is going to be that CPI print. What are you looking out for?
Yeah, the CPI is a big number this week again. If you look at the headline, expected to drop to 3.1%, but it's the core that everyone's really focused on. The core expectations at 3.4%. Yeah, it's central banks can control core inflation much better than they can control headline, with obviously energy prices affecting the headline numbers. So if we start to see a significant drop in the core index, then people are going to be convinced that September will be a point which the Fed might like to cut rates. The market's priced in 2 cuts for the rest of this year, which seems kind of sensible. You wouldn't have thought they're going to be able to do much more than that. So looking at the core data, just not the headlines, and also the real average hourly earnings. If you think about the 3 pillars that are keeping economies going at the moment, it's wage inflation, it's employment, and it's excess savings. When we start to see any of those pillars start to crumble, then people will expect some kind of weaker economy.
Yeah. Bryn, I thought we were done with the dreaded R word in the United States. I thought a recession wasn't in play, considering how strong it actually was in the underbelly, even though there are some weaknesses.
Yeah, look, if we look at from the first interest rate hike to the first recession through history, through contemporary history, if we'd have had a hike, 1980 would have had a recession. It happened just before 2 years, but there was about nearly 7% of hikes in that point. In 1999, there would have been a recession, and that would have occurred around March this year. Most of the recessions would have occurred at the back end of 24 into 25 and 26. So this is nothing unusual. Everyone kind of sort of talked about recession when rate hikes started happening. Well, of course, because history does tend to lead to that lag. We don't think it's imminent in the short term, but let's face it, unemployment in the US has risen 0.7% since its lows. It's just shy of the Sham rule, which is obviously one thing that people look out for. So I wouldn't sort of knock it completely out of the park, but it's definitely, it's unlikely to happen in the short term. In fact, I've got quite a little bit of a joke, actually. Taylor Swift's last concert's on the 8th of December. Arguably, she's added a huge amount of GDP to Europe, the UK, and the US. Could it happen from the 9th of December when Taylor Swift finishes her world tour? It's a bit of a joke, but the point is that we have this long variable lag, and it's going to be parked back into the back end of this year and beyond before you would likely see any recession.
Interesting one, Bryn. I think a lot of the data points around Taylor Swift are not captured by official data, are they? When you've got the resale of tickets taking place between people, that's where the real inflation's happening, Bryn. But let me ask you about the unemployment rate on a serious note, because that has moved high. We're now 4.1%, and a lot of policymakers have not been concerned about the unemployment rate this time round because it's been stuck so much lower, and they simply thought that the for higher sign would come down from the window, not necessarily the unemployment rate going up. Are we getting to territory now where policymakers will be concerned about the unemployment rate?
I think they've started to look at it. They've got to have a side eye on it. I mean, the US Fed's, it's not just about inflation; it's about economic stability. There's some interesting data out there, though. For the participation rate in the sort of prime cohort, that 24 to 50-year-old, is the highest it's ever been since 2001. And so you get these sort of kind of strange aberrations within the data that whilst unemployment's rising, the participation rate's quite high. We've still got jobs that are reasonably attractive, as in there's a lot of jobs for people out there. And, if you look at quits rate, for example, that's back to where we were pre-COVID. So it's, there's this sort of weird aberration of data in there that still points to positive news. But sometimes if you just Google, for example, job losses in the US, you can go and find loads of stories about small companies, about larger companies laying people off. So if you are looking for canaries in the coal mine, I'm not even close to the US economy, but surely policymakers in the regional and the beige book, for example, should be able to pick up exactly, is this a problem or not?
Bryn, let me ask you about the French election and how we think about the risk around credit markets, because OATs, the 10-year yield has come down over the course of this month now. So there's been fading concern as we've gotten closer to the second round, and now on the back of the outcome, we still seem to be holding at this lower level. Are you concerned around the debt position in the French economy, given that there are fairly significant spending commitments by the left-wing parties?
Look, it's a bit of a Duke of Wellington trade at the moment. The French-German spread was around 40-odd basis points. It blew out to 80 basis points, and we're back in the 60s. So we're neither halfway up nor halfway down. How much of these policies they're going to be able to put through, questionable with such a fragmented political system. If you look at crossover, which is obviously a good proxy for risk, that started pre-elections at around 289. It blew out to about 330 something, 340, and is back at exactly where it was pre the election. So the credit markets have turned around and sort of said, well, to be honest, if you look at the French kind of AT1s, for example, as well, a similar kind of move. I was just looking at some of the credit risk there. I mean, if you look at Credit Agricole, 260 over, blew out to 380 over, is back at 320. So not fully priced in, back to where it was. Big questions. I think what it's done is shone a light on the fiscal position. And I guess Italy's the next one, but you wouldn't want a light shone on as well as a huge economy, which requires a lot of financing of its government as well. Let's see. It's a wait and see trade, and the kind of markets told you that because it's, as I say, its spread is completely in the middle from the worst it got to the best it's been in the last few weeks.
Bryn, we appreciate your time this morning, so we're going to keep you on for just a little bit more, if we may. So we'll chat to you in just a bit. We'll head off to an ad break very quickly. Bryn Jones is the head of fixed income at Rathbones, and we'll unpack the conversation a little bit more with him in a bit. Coming up, though, on the show, U.S. President Joe Biden vows to stay in the race despite growing concerns from within his own party. We'll discuss more next. Plus, oil prices slide on worries that Hurricane Beryl could hit U.S. demand as it makes landfall in Texas, shutting down key refineries in the Gulf of Mexico. We'll have more later this hour, and we'll bring you more of our coverage of the French elections. Charlotte, of course, will will be speaking to the former ECB President Jean-Claude Trichet later today. Don't miss that interview at 9:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
Welcome back. Now, U.S. President Joe Biden is dismissing growing concerns from Democrats and party donors surrounding his presidential bid, vowing to stay in the race. In an open letter to party lawmakers, Biden declined to end his campaign, citing the will of voters in choosing him as their nominee. Now, Biden phoned into MSNBC yesterday, urging those calling for him to drop out of the race to challenge him at the convention.
I'm getting so frustrated by the elites. Now, I'm not talking about you guys, but about the elites in the party who they know so much more. If any of these guys don't think I should run against me, go ahead, announce for president. Challenge me at the convention.
I mean, this used to be something that Donald Trump did.
Exactly.
Calling into shows.
But to Morning Joe in particular.
Exactly. Yeah. Very interesting one that the president has taken on. Speaking of the president's fundraising operations, they're also struggling in the wake of the debate. Sources telling CNBC that crucial campaign bundlers have either limited their outreach or stopped making calls altogether to potential donors, with one fundraiser saying, quote, "No one is picking up the phone."
Meanwhile, White House physician Kevin O'Connor released a letter confirming the president has not seen a neurologist outside of yearly physical examinations. It came after reporting by the New York Times, confirmed by NBC, that an expert in Parkinson's disease from Walter Reed Hospital visited the White House at least 8 times in the span of 8 months. O'Connor said the specialist has treated a range of patients at the White House for years and said the president showed no signs of a neurological disorder in a recent physical exam. Markets are beginning to see an increased likelihood of a second Trump presidency, with the former commander-in-chief getting a lift in the polls. The ongoing 10-year Treasury yield curve inversion steepened in the wake of the debate, suggesting investor concern around the outlook for the US economy. That's not the only bets that we are seeing through the markets stifle. Seeing a 40% chance of President Biden dropping out of the race, suggesting there's a 40% chance he will not seek re-election. So I guess all eyes on this Democratic convention that Biden has said, let's challenge him at the convention if you think he's not going to stand. So effectively thrown down the gauntlet. But I think what's interesting, the debate that's happening in the background, whether he should stand and whether he can get through the election and also govern. You've seen a lot of criticism lobbed by various different parts of the Democratic team, but not very visually. I think we got to 10 members yesterday from the Democrat Party. There's a view that perhaps his own team has bunker mentality, that they've been micromanaging him for the last year. This is a report in the Wall Street Journal saying, look, the team has stage managed his schedule now for more than a year. That includes his itinerary, who he speaks to on a day-to-day basis, his flying from coast to coast, personal interactions, no Super Bowl interviews at halftime, for instance, very scripted pleasantries with donors who say they feel misled about his abilities at this stage. So now I think what we've got is him going off script, trying to ensure there are some impromptu moments and pushing back against all the reporting that he's not up for the job in these off-the-cuff moments where he seems to have been really very much on an auto cue now for a number of months.
You know, one thing I think we must note in all of this, and of course all those things would probably point towards people having more worry, but none of those things that you've even mentioned actually are as significant as being able to fundamentally govern the country. Right? And so one might say, well, he'll still be able to do that. But we don't know exactly how that's formed and how that's gone over the last 3.5 years or so, and whether he'll be able to do exactly the same over the next 4 years. And I think that's the element in doubt. At the same time, I actually just just doing all of this, I actually just ran into as well, and I mean, he's actually been around for a while now. A gentleman by the name of Alan Lichtman, who has correctly predicted the result of 9 of the past 10 elections. And he only missed out on the one in 2000, which he still believes Al Gore had stolen from him then. And he's come up with 13 keys to the White House. And ultimately, and I won't go through all of them, but really speaks about party mandate, meaning that after the midterm elections, the incumbent party then holds more seats in the U.S. House of Representatives. Contest, meaning that there's no serious contest then for the incumbent nominee, as well as incumbency itself. If you start to take away Biden, you might lose those, contest and incumbency, which become very important along with other things like charisma, incumbent charisma being very important as well. Scandal, of course, you've seen the Hunter Biden situation still. So you don't want to lose too many of those 13 because then it takes away his chances of actually being president again.
Yes, performance, face time, all quite key for Biden at this stage. I think what's also interesting at this stage is that we're not hearing so much from Trump. Yeah. This is almost quiet for Trump.
It's actually eerily silent. It is too silent, actually. It is almost worrying because this is when he usually ramps up.
So are the advisors saying, look, Biden is on the back foot. Let him just play this out. You know, keep the spotlight on him. You don't have to say anything here.
Yeah, it might be working.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.